We're going to talk much more about the Chinese economy. This is a big focus. Peng-Kong Yu, who's the assistant professor at Renmin University at China's School of Finance. Welcome, sir. Welcome to BizAsia America. A lot of people are watching what's happening in China. Let's start with the banks, the insurers, the developers, the growth model. A lot of people are asking a change in the growth model, but does this recent bump up in growth show that maybe everything is working okay?
I think that, of course, we haven't seen hard landing, but I think that there's still a long-run structural problem. And in the short term, I think it's so far so good.
The banking sector, we had this recent liquidity crunch in June, and a lot of people are saying, well, more rules are needed, more reforms are needed. What's happening there right now?
Well, I think that, the June incident, the liquidity crisis, haven't really had much big impact on the banking income for several reasons. The major revenue for the Chinese banking sector comes from the fee income and the interest rate difference between the lending and deposit set up by the government policies. And second is that in the June incident, the central bank trying to curb credit from flowing into the shadow banking sector. I think the purpose has been well achieved. But there are kind of risks looming ahead. One is a local government debt, which is mounting, and we don't even have accurate estimates about how big that is. And but we know that much of the debt was financed by the banking sector, so which could be a timed bomb. But so far, we haven't seen a full-blown crisis yet. And second is that the interest rate liberalization, particularly the lift of the deposit rate ceiling in the near future, will inject fierce competition in the banking sector and will further compress the profit margin.
You mentioned profit margin. A lot of the people I talked to over in China, they're very concerned about the profit margins. They've declined, especially in some of the big manufacturing sectors there. The people you speak to on the ground, what are they telling you about that's the major issue in terms of profits in manufacturing?
Well, I think that the large manufacturing, particularly SOEs, are going well. And because one is that the lift of the deposit rate, lending rate floor benefits SOE, and second is that those targeted stimulus packages by the government also benefit SOE. But I think that the difficulty, the problem is that we don't know, we cannot tell at this moment whether those small and medium enterprises, the SMEs, have large-based recovery or not.
This recent boom and sort of the data, we've seen mixed data for the last few months. A lot of people are concerned about housing prices. Some people are concerned about liquidity. Some people are concerned about profits. I mean, there's definitely things to worry about. What's your number one concern?
Well, I think that I wish the Li administration can stick to its policy for the structural change with minimum stimulus, because as long as the government act as implicit guarantor for SOEs, SOEs will have much a bigger advantage over SMEs in the structure of the economy. And we have to solve these structural issues, because those structural problems are long-run problems for the Chinese economy. And at least in the economic downturn, we have a favorable window to have these reform. One is that this aging population and the slower pace of urbanization make the GDP have can tolerate lower GDP growth, but still maintain full employment. And second is that if those long-term structural problems are not solved right now, it will lead to bigger problems and resource misallocation in the future.
Peng-Kong Yu, professor at Renmin University, thank you very much for joining us.